Welcome to Elliott Wealth Management's 2025 Mid-Year Economic Update. I'm your host, Christopher Calandra, for today's presentation. And jumping right in, I want to remind everyone, if you listen to the economic update we provided to you in January, our outlook for 2025 is that the trend is your friend. Our base case continues to be for a modest continuation of the bull market that began back in October 2022. This year has been tumultuous. A lot has gone on, including a sharp sell-off in the stock market in April following President Trump's announcement, so-called Liberation Day, that got a lot of negative responses in the early going, but then we saw a sharp rebound. So we're on pace for what we thought would happen, not that we predicted all that has occurred, but at the macro level, the idea that we could continue to make new highs in most stock market indexes, but not be as explosive as we saw in 2023 and 2024. So far, our base case seems to be on track for coming to fruition. The state of inflation is important in almost everything we're going to talk about because it's still, as it's been since 2021, a key issue for the economy and by extension the markets. The good news is that inflation over the last 12 months has declined. It's important to note that the Federal Reserve would like their target is for inflation to be at 2%. It hasn't achieved that, but it's pretty darn close. We're at roughly 2.4%, give or take, as of this recording. That has us within striking distance of what the Federal Reserve says they want. This, of course, comes down from a high back in 2022 of over 9%. So inflation is pretty tame right now and has steadily declined. Now, we're going to double back to inflation when we move a little further and we talk about where we think we're going and what's happening with the Federal Reserve and Chairman Jerome Powell in particular. Because, well, let's talk about it now. When you do rate cuts, when you look at rate cuts, the expectation in 2025 was that the Federal Reserve would reduce interest rates. That's gotten postponed. We could argue whether this was good Fed policy or not, but that's gotten pushed back a little bit. According to the Federal Reserve, and I'm going to talk about Chairman Jerome Powell specifically, it's because of uncertainty surrounding the tariffs, which are an unknown as of this recording. They've pretty much been an unknown since April. It's sort of a shifting landscape. We don't know how it will all end up. We may have to wait a while. But in June 24th of 2025, Jerome Powell said the following: "For the time being, we are all well positioned to wait to learn more about the likely course of the economy before considering any adjustments to our policy stance." Conventional wisdom, and we share this thought here at Elliott Wealth Management, is that the Federal Reserve's next move is likely to be interest rate cuts. The key question is when that will occur. It doesn't look like it'll happen this summer. There are fairly good odds that it'll happen in September at, I believe, the next Fed meeting. The consensus still is that there'll be 2 rate cuts this year. I'm skeptical about the 2 rate cuts this year. If I was a betting man, I would say that 1 rate cut is more likely. It's pretty uncertain, and the Federal Reserve is pretty resistant to cutting rates while there's so much uncertainty revolving around tariffs. Let's take a moment and talk about causes for optimism. Even though we here at Elliott Wealth Management and went into this year with a little bit more of a cautious outlook compared to the previous 2 years, there are lots of causes for optimism as I see it. Number one, we have continued resilience. The market, the economy has shown its resiliency time and time again over the last stretch. The most recent example is the sell-off with the tariffs, only for a nice bounce back. So the market seems resilient, and that's a healthy sign for things. Now, that could change, but I put that in the category of causes for optimism for the time being, at least. Another cause for optimism is that recession fears, which got very high back in April, again after Liberation Day, with some notable Wall Street firms putting the odds at a recession at 100%. Well, they've backed off that. I mean, really, the recession fears have all but disappeared, at least in the mainstream. And that seems to make sense. I do not think we're going to have a recession unless something changes here sharply. I think recession is off the table. Part of that is because we have a healthy job market. That's another reason for optimism. The tariff issue has largely been digested. I think the market has sensed that President Trump is on a mission to put in tariffs and renegotiating trade deals. The worst case scenario seems to have gotten off the table. That is represented by the sharp bounce back after the sell-off. So I think this is going to be sort of a chronic issue. It's going to be an issue that stays with us for a while as the administration does its thing and works with various countries around the world to renegotiate the tariff deals. China is very important. The EU is very important. We just don't know at this recording, and I think this is widely accepted, of how it's all going to play out. But the reason why this is optimistic is that the market is not nearly as frightened by what is happening and what the results might be. That's why it's in the optimism column. We have a business-friendly administration. I know some of you listening to this might be fans of President Trump. Others might really dislike, maybe even worse, President Trump. And there are others that might be sort of in the middle ground. It's clear, though, that the administration is generally business-friendly. They have initiatives to decrease regulation, increase the speed of approvals on various things. They are U.S. energy friendly. There's a lot of aspects of the Trump administration that would broadly be defined as friendly to business. That's why I have it in the optimistic column. We have generally healthy economic fundamentals. In the first quarter, the economy did shrink a little bit. I believe that was in anticipation of the tariffs and a little bit of a hangover from what was a weak end of 2024. We don't have, as of this recording, the results of the Q2 GDP, but it's widely expected to be a very good number. I would be surprised if it's anything less than 2.5%. I would like to see a number that begins with 3 for an annualized Q2 GDP number. We just don't have it yet. But between the job market, the economy growing in the second quarter, we have overall healthy economic backdrop. We also have a lot of innovation in the form of artificial intelligence, AI, that's creating a new tech innovation cycle that is already affecting our lives, business and personal, and that is only going to accelerate. These innovations from AI are going to be profound and powerful. If you haven't paid any attention to this, I would urge you to do so. This is really important stuff. The expectation is mostly optimistic for innovation because you're expecting the cost of delivering services to go down because of the technological efficiencies that AI can create. Just the speed of information is growing by leaps and bounds. So I put it in the optimism category. Granted, some people might put it in the pessimism category or reasons to worry category, because you could have people, certain industries, certain job classifications that lose their jobs because they're replaced by AI. I think, though, on balance, AI is cause for optimism, and I think the market has digested that and believes that as well. And the last one that I have listed for all of us today is the extension of the 2017 tax law, which reduced taxes on most Americans. It was a tax simplification act. The vast majority of Americans take the standard deduction, which is an easier way to file your taxes as compared to an itemized deduction. There were a lot of things that were good in that bill. Now, when you switch to politics, this will be hotly contested because the Democrats will make the assertion that this was really a giveaway to the rich. Candidly, I would argue against that. The share of income taxes paid by the wealthy went up by, I might have the numbers not exactly right, I should be close, went from 38% up to almost 45%. So the wealthy did get a tax break like all tax-paying Americans did in 2017, but the share of the taxes that are paid by the wealthy went up. They're paying a greater share than they did before. So I think some of the arguments that certain people will make saying that this was a giveaway to the rich doesn't hold up under strong scrutiny. I want to talk about the one big, beautiful bill that was passed into law by Congress by the narrowest of margins. Vice President J.D. Vance broke the tie in the Senate, and in the House it passed by only a 4-vote margin. The Republicans needed almost all of their caucus to vote for this bill. No Democrats in the Senate or the House voted for it. Highly contentious debate about this bill between the Democrats and the Republicans, and even within the Republican Party, this was quite heavily debated. So there's a lot of disagreements about the law. We'll have to see how it turns out. This is a big bill, lots of pages, lots of elements to it, but I just want to highlight a few of the key items as I see it. Number one is it permanently extends the 2017 individual and business tax cuts. I think that's a positive. If this bill was not passed into law and the 2017 law was allowed to expire at the end of this year, we would have seen significant increases in taxes, which I do not believe would have been healthy for the economy and the markets. So that's a big positive. President Trump fulfilled 2 of his campaign promises, reducing taxes on tips and on overtime. I'm choosing my language carefully because it did not eliminate tax on tips. There are caps on what you could not pay taxes on. There's also income limits. I'm not getting into the specifics, but if you are getting some of your money in the form of tips and some of your money in the form of overtime, you're probably getting a tax break. That's a powerful feature of the one big, beautiful bill. There's a lot more money for border enforcement. Polls show that Americans do support this, but the devil is in the details. Again, another highly contentious debate between Americans, Republicans, Democrats, and independents. But there's a lot of money for border enforcement, for ICE in the law. There's changes to Medicaid and SNAP. This also made its way into the headlines and on the news talk shows. There's changes to Medicaid and SNAP. The U.S. will spend more on Medicaid and SNAP moving forward, but not as much as originally forecasted by the government. And the bill imposes new work requirements to try and encourage or even push people off Medicaid and SNAP. SNAP, by the way, is food stamps, because if you're a working age, able-bodied individual, we would like you, I guess, as a society, at least according to the Republicans and President Trump, to go to work if you can. And if you don't do that, if you want to donate your money to donate your time to charity, if you're in school, or go to work. Otherwise, maybe you can't get Medicaid and SNAP. There was an increase to SALT deduction. It was put down to $10,000 back in 2017. That was increased to $40,000 in this bill. Most people like that. Even the Democrats, I think, like that, even though they didn't vote for the bill. This is probably something that has rare bipartisan support. And then this has not gotten a lot of attention in the media, but it is very, very important. It provides immediate expensing for domestic research and development, shorthand R&D. So if you follow me on this, if you invest in a plant or a factory or some research and development, you used to not be able to deduct that all right away. You would have something called a schedule, a schedule to show how much depreciation, how much you could deduct of that expense. It could be 3 years, could be 7 years, could be longer, depending on the product. It's kind of complicated. But the key element here is now, if you open up a domestic factory and it costs you X number of dollars, you could immediately, the business, the corporation, the individual, could immediately expense that on their tax return. And this is important because it aligns with the Trump administration's stated goal of returning manufacturing to the United States, to bring more manufacturing back home. And this seems very much aligned with that because it allows businesses to expense that right away, easing the burden of that investment. So that's a key part of the One Big Beautiful Bill. It has not gotten much discussion as I have read and listened to lots of news on this topic, but I think that's a key part. So those are reasons for optimism. And I always want to share the other side of the coin because there are things to be worried about. There's things that we're watching here at Elliott Wealth Management that could derail what we foresee as a continuation of the bull market. Like in January, the key reason to worry in my mind, in our minds as a team, continues to be that the S&P 500, most stock market indexes, are historically expensive. Because the market has done so well since October of 2022, stocks have become expensive. When you look at the price of the companies versus the earnings that they generate and the expected future earnings, it is expensive on a historical basis. It's a tricky thing though. Just because it's expensive doesn't mean that it'll self-correct tomorrow or next month or even this year. It could play out for a long time, but that weighs on us, the reality that the stock market, the S&P 500 as a great proxy, is historically expensive. The impact of tariffs is another reason to worry. I wouldn't say it's automatically a negative. Some people, you might listen or read, will say tariffs are going to do this, tariffs are going to do that, tariffs could do this, and they're very confident and they're very negative. I wouldn't share that assessment. I think we don't know. I believe it's sort of like in a baseball game that has 9 innings. We're only maybe 3 or 4 innings into the game, and just because we think where we are in the 3rd inning might be where the score is at the end of the 9th inning, but it may not be. You could have a rally, you could have errors, all kinds of different things can happen. So it is a reason to worry because there's a lot of uncertainty. There's a certain amount of negativity out there about the tariffs. It's also historically difficult to find parallels. Some people are going back to the 20s and the Great Depression to look at a parallel, which might have some usefulness, but at the same time, the world is so different today, the global village, technology-based economy. It's I think, a flawed parallel in many ways. So we have this in the category of reasons to worry, not panicked about, but worried about what the tariff policy is going to be once the dust settles, and what will the results of this be. Probably some good, probably some bad. We'll see where that all nets out, but that's why it's in the reason to worry category. The Trump administration, whether you really like the administration or really dislike the administration, they do a lot of unexpected things. And that is a reason to worry because the administration can come out with something today, tomorrow, next week, next month, next quarter that could change the landscape significantly. He's making bold moves bold moves could work out great, or they could turn out in hindsight to be big mistakes. So it's challenging to kind of forecast what might happen when you have an administration that's acting fast, that's being bold, that seems to be in a hurry to make changes. Even if everything works out, which is not likely to be the case, these unexpected announcements do throw a monkey wrench into things every so often. Using the Liberation Day announcement, that's a good example. What he announced that day was not at all anticipated by just about anybody, and that led to sharp sell-offs and a lot of hand-wringing. Another reason to worry, we talked about the Federal Reserve, is the Federal Reserve is in a little bit of a difficult spot. The bias, I believe, is to cut interest rates, but they have the tariff uncertainty, which they seem to be very uneasy about. The inflation situation seems to largely be under control, yet it hasn't gotten to their 2% target. The market seems to like the idea that they cut rates, but they're taking their sweet old time in doing it. The Federal Reserve has to get a lot of this right with their next move and the timing of the move. If they make a mistake, that will be very much a reason to worry. Two more reasons to worry. The federal debt and deficit. We've talked about this on previous economic updates. I believe it continues to take center stage as a topic for Americans, for Republicans, for Democrats, for independents. You hear more talk about it than you did in years past. Now, the Trump administration, I think, has largely been tasked with dealing with this. It's open to debate whether the one big beautiful bill tackles this in any way. It depends on what forecast you want to sign on to. I don't think we know. Secretary Bessent, U.S. Treasury Secretary Bessent, makes a pretty compelling argument that this actually will be favorable in terms of federal debt and deficit moving forward. But there's also ample arguments on the other side too. I don't think we know, but it is a central issue. And if the markets, if the economy, if Americans, if the bond market grow too uncomfortable with the state of federal government financing, we could have a mess on our hands. So far that hasn't happened. Something we're watching, could be a reason to worry. And the last thing, and there's always this issue, is geopolitical unrest. We still have the Russia-Ukraine war, although that's mostly off the front pages. We have Israel and Gaza, that whole mess, which is a tragedy. That's been going on for a while, not necessarily on the front pages recently, but still an issue in a very sensitive part of the world. More recently, you had Israel attack Iran, and then the United States did a bombing on 3 nuclear sites in Iran. That caused a lot of worry, and that was soon followed by a ceasefire that's, as of this recording, has held, where Israel and Iran are not shooting at each other and the U.S. is not shooting at Iran. So we'll see how that plays out. But this geopolitical unrest could upset the apple cart. It has done so at certain times over the last couple of years. There's a lot going on around the world, a lot of hot spots and danger zones, but so far, so good. I am cautiously optimistic. The team here at Elliott Wealth Management, we are cautiously optimistic. We think that there's a good chance that the markets could continue to churn higher, grind higher, continue the bull market. But as I said at the beginning of this presentation, probably not as explosively as we saw in 2023 and 2024. And if we can do that, if we could get a little higher by the end of this year compared to where we are today in most major market indexes, I think that would be a successful year if we could pile on some positive returns on top of what has been a great run the last couple of years. That's what we're hoping for. Fingers crossed we'll see more of what we saw in the first half in terms of the ultimate results. Maybe a little calmer in the second half of the year would be nice. But even though it's been ups and downs, we're happy with where we are mid-year and are cautiously optimistic, as I've stated a few times already, about how we could finish up this year. So what can you expect from us? We're regularly reviewing changes that may affect you. The One Big Beautiful Bill is a part of that. All of the economic information I shared with you represents this. We're going to communicate with you regularly. This broadcast is an example. The Simply Financial podcast is another. The monthly mailings, client meetings that we have with you regularly, all of this is part of our regular communications with you. We're going to review changes in what's going on with the economy, with taxes, with estate planning, as well as investment issues for you. Your health, your well-being is our highest priority. The team here at Elliott Wealth Management appreciate the opportunity to assist you with your financial needs. We greatly understand the importance that we play in your financial lives. We do not take that lightly. We're always planning for your success together. Thank you for listening to the 2025 Mid-Year Economic Update. I'm your host, Christopher Calandra, and this has been provided by Elliott Wealth Management Services.
The views expressed are not necessarily the opinion of Osaic Wealth, Inc., and should not be construed directly or indirectly as an offer to buy or sell any securities mentioned herein. Investing is subject to risks, including loss of principal invested. Past performance is not a guarantee of future results. No strategy can assure a profit nor protect against loss. Please note that individual situations can vary. Therefore, the information should be relied upon when coordinated with individual professional advice. Please note, the information being provided is strictly as a courtesy. When you link to any of the websites provided here, you are leaving this website. We make no representation as to the completeness or accuracy of information provided at these websites. Nor is the company liable for any direct or indirect technical or system issues or any consequences arising out of your access to or your use of third-party technologies, websites, information, and programs made available through this website. When you access one of these websites, you are leaving our website and assume total responsibility and risk for your use of the websites you are linking to. Securities and advisory services are offered through Osaic Wealth, Inc., member FINRA, SIPC. Insurance services offered through Elliott Wealth Management Services, LLC, not affiliated with Osaic Wealth, Inc.